one cannot take their eyes off HDFC Bank, Shrishti, given the fact that it is in the positive territory today.
Well, yes, it is in the positive territory, and that's after the management's commentary on the earnings growth, where they do say that the clear focus for the bank as of now is on the earnings push and not on the market share gains or the loan growth gains as of now. And brokerages have come out with a bullish note as well on HDFC Bank, where Bernstein is maintaining an outperform rating and Citi is also maintaining a buy on the stock. But how is HDFC Bank likely to perform going forward, and is this a correction phase finally over? What is brokerage call on this one? Let's get in more details from Gaurav joining us right now. Take it away, Gaurav.
HDFC Bank is definitely going to be in focus today because much needed positive commentary has come up from the management themselves. So Goldman Sachs held an event called HDFC Group Day, where management has reiterated that the focus from here on will be on the EPS growth over loan growth, and the focus is going to be definitely on the profitability, and it won't disappoint the investors. When we talk about any directional commentary, we know that we are in a tight liquidity situation, and on back of this the management has said that they won't be chasing any high cost deposits from here on, but they will surely make sure that the LDR ratio will be in a healthy range. So if you look at excluding merger, if you look at the loan to deposit ratio, it is still in the range of 85 to 90%. Apart from that, management has also said that they will be maintaining net interest margins and ROAs within the desired level. So if you look at ROA, they are still in the range of 1.8 to 2%, and the bank has been able to maintain this ratio historically as well. From here on, bank also believes that we may see some kind of operational leverage kicking in for the bank, and this will again help the profitability. They will also take some kind of repayments of the high cost borrowings to maintain this profitability at a sustainable level. And lastly, talking about the speculation of its one of its subsidiaries, HBD Financials. So for that, bank has said that everything is on track and in line with what the management was expecting. And lastly, if we look at the brokerages also, they are being a little bullish on the bank again. So when we look at Bernstein, they have maintained its outperform rating and a target price of 2,100 rupees because they believe that long-term thesis for the bank still remains intact, and they are also confident on the risk-adjusted yields for the banks from here on. Citibank again reiterated its buy rating and a target price of 2,050 rupees. And lastly, Goldman Sachs has also maintained its buy rating with a target price of 2,000 rupees. So all in all, positive commentary coming up from HDFC Bank, and we also saw that the stock is already down from 1,600 levels to 1,400 levels after the results. But let's see how the stock moves from these levels now that the positive commentary has come up from the management.
Thank you so much for that, Gaurav. And like you mentioned, positive commentary coming in from the management of HDFC Bank. Let's actually listen in to what HDFC Bank MD and CEO had to say in that analyst meet and why the stock is perked up in trade today.
So this is the period of transition we will have to adjust to. And so our anchor is that as a company for 29 years, we have always been consistent on the bottom line growth, which you can call it the earnings per share or whatever that is. And going forward too, we will have that as an anchor. So a lot of other metrics you may want to sort of ignore because of the transition, especially on the loan growth. And that could be a tad lower, but that's all right. I mean, that is something that is not going to be at the cost of my earnings trajectory.
All right, so that was the management of HDFC Bank sounding positive, at least reassuring all the investors that they are very much firmly on track and nothing to be perturbed about, isn't it? But let's ask our experts what's their view coming in on HDFC Bank in particular. Today on the technical front, we have Foram Chheda, who is the founder at Chart Analytics, joining us on the show. And along with Foram, we have Rajesh Agarwal, who is joining us. He's the head of research at AUM Capital. Very good morning to you, Rajesh, as well as Foram. Thank you so much for joining us on ET Now. And Rajesh, let me come to you. You heard the management, you heard Gaurav at least outlining what the brokerages are saying. What's your view? You concur with the brokerages?
Good morning, Cheryl. Good morning, Shrishti. I heard management, I heard Gaurav, but before that, we have been extremely bullish on HDFC Bank from a very long period of time, despite the fact that it took a beating after the results from almost 1,600 plus levels to 1,400 odd levels corrected. And we felt that there was an opportunity for long-term investors to accumulate. We should not forget that HDFC Bank, after the merger, has become one of the fifth largest bank in the world. They have 9,000 plus branches, 20,000 plus touch points. Housing division is doing well. Not to forget, in FY25, we believe that the bottom line would be around 80,000 odd crores. Even in this quarter results, everything was good except for the beat on NIMs. And that was the reason for which the stock got a beating. I'm very surprised when we are talking of a bank with such a large presence, one of the fifth largest bank, and we are worried about NIMs going down by 10 basis points or 20 basis points. This can happen because the merger was so huge and there would be a transition period that would take some amount of time. And now when the management has come on board and said that they would be looking on ROA and profitability and LDR ratios to be maintained, I think it's high time people have a look in this counter and take a position for a minimum period of 12 to 18 months. I won't be surprised if it goes to around 1800 odd levels in this period. And apart from all the subsidiaries, be it HDFC Agro or the financial subsidiary, that's HDFC Financial, all are doing extremely well. It's a buy from our side.
Okay, it's high time to look at HDFC Bank if you still haven't done so. And in the next 12 to 18 months, Rajesh is looking out for 1800 rupees, and that's the call coming in from him. But Foram, what an excitement on the stock for today. It's clearly going above its 20-day moving average. 1.6% gain is what we are having at this point in time. How is this stock placed technically, and what are the levels that you are looking out for?
Well, hi, good morning, and thank you for having me on the show. Well, let's speak about it in a little bit of a broader perspective. Now, when we talk about HDFC since 2021 October, the highs was 1725. The stock has been in that range since that time. So if we talk about on the lower side is between 1300 to 1320. On the higher side, it's been 1725 to around 1720 to 1725. Now it's been like almost for nearly more than 2 years that we are seeing this broad range, where maybe from an investment perspective, there wouldn't have been too much of a return. But now from a bit of a shorter perspective, what you're seeing on the screen is a daily chart. And we've seen that right now the stock is now moving up towards a 23.6% retracement of the entire fall, what we've seen from 1720 to around 1360 to 1380 levels. So maybe we can expect from a short term or a trading perspective a bit of a resistance near 1460 to around 1480 levels. However, bit from around 2 to 3 month time horizon, we can expect some upside continuation of a momentum because of the volume. There has been a very good increase in volume lately since the Jan month, compared only once it takes us 1720. Since the past 2 to 3 years, we have seen that it's been in this broad range and it has been just trying to consolidate. So the moment technically it gives a breakout, we can expect a very good upside momentum towards targets of 2100 also, provided it takes off those levels. Till then, we can expect that around 1550 for the next 3 to 4 months and 1700 levels in the next 6 months. As it was said earlier that around 18 months can be a holding period where one can expect some bullish momentum.
That's a view coming in from both of our experts sounding pretty bullish on HDFC Bank. But technically, the levels that you need to watch out for HDFC Bank in the next 3 to 4 months would be 1550 to 1560 is the target what Forum is expecting.